All right, again, welcome everybody. Thank you for jumping on, and we're going to get into this pretty quickly. Before um, I introduce what we're actually, the person is going to be the expert here talking about this, the top producer in the field. I want to just kind of go over a couple things with you guys and just show you a few things that's happening here at Mint Builder, because I know that most of you are involved or have been involved with Mint Builder at some point, and so I'm going to give you just a real quick, just a little sneak peek of what's happening here behind the scenes. So as you can see here, most of you probably know that we've been trying and working so hard to get this new website released. We were trying to do it months and months ago already, and it's been a long process. We're trying to simplify things here, and not do so many of those custom things that we did in the past, and make it so that people could just get silver and gold and get it quicker, faster, easier. And also for those who want to enjoy the side of affiliate programming, just like Amazon, Amazon affiliates, we do offer that. So hey, you refer people to buy silver and gold, we're gonna get you paid for that. So we want to make that stronger and better and more simplified. And so that's what we're working on, and we are almost there. It's I promise you, it's this close. It's this close. It's something again we were hoping to have done months and months ago. But again, when you're talking about precious metals, the price is all over the place. It's moving up and down by the second, constantly moving. And when people are coming in, they're saying, "Hey, I want that to be my savings account." That's hard to do. It is a little bit of programming side of it. I'm not a programmer, so I just have expectations that I want this and want that. But there is a lot to it. And having the Mint wallet where it's a digital savings backed by actual physical gold and silver. Again, a little bit of programming involved. And that is what it is. We're almost there. So this is just a quick preview, just showing you our site is getting there. It's going to be more product driven, more product based. Mint Builder before was kind of like almost like a MLM setup style, where we're kind of moving away from that, where we're just a precious metals business. And we have an affiliate program, if you want to be part of it. And if you don't, that's awesome. We still offer a lot of great metals at really great prices. And so we have, some stuff happening here, like our savings is going to be called the Stack Saver. We have resources such as we're going to talk about here tonight called Infinite Banking. Lots of good stuff to refer and earn, become a VIP, all kinds of good stuff. But without going into it too much, because I want to save this for later, because this is we'll do a webinar just for this coming up in the near future. But for now, we're going to talk about tonight something very, very important, and that is something of becoming your own bank, and that's important. That is look where we're at right now in our own personal economies. You can look in what's happening in the United States, and then internationally. We have people. There's probably some on here right now that are from other countries, because Mint Builder is in a lot of countries. What's happening in the economy right now. Well, that's important. It's good to know. But you can't really do a lot with that economy unless you first fix your own personal economy. And that's what Mint Builder was started for in the first place. That's why we're here. We want to help people fix their own personal economy. And there's a couple ways to help get that started. One way is generalized is savings. It's something that my generation doesn't really know much about. My parents' generation barely know about it, but their parents' generation, my grandparents, the ones that were born in the 30s, they know what savings is about, because they were around when they were kids in the Great Depression, and they know what happened, and they know how important it is to have that savings. Not just to save and sit on all your money, but to have money built up that you are sitting on that you can and then invest. And that's what makes all the difference in the world. And we believe that saving precious metals is a great tool to help you get you there. But there's another tool that will help you save even more efficiently than just putting it straight into precious metals. You can use this tool to buy precious metals. You can use this tool to invest. You can use this tool to buy a new house. You can buy this tool to buy, whatever it is you want to, maybe you want to invest into a business. This tool that we're going to be talking about is the ultimate savings plan. And I'm going to switch it over here in just a second, and I'm going to introduce you to the ultimate person who knows about this ultimate savings plan. And this guy's name is Nano. And Nano, we've worked with a little bit in the past. He's been a part of our Mint Builder family, and he's done tremendous things here at Mint Builder. But in the industry of this infinite banking concept. He is one of the top producers in the country, being licensed all over the United States and knowing what he's talking about, knowing what he's doing. He is the guy that is going to be able to help you get established and get set up properly. Now, we have partnered with one of the best companies, I believe, in the world when it comes to this. They're just good-hearted people, and they're allowing us to come in. For those of you who come through MintBuilder and go through this company with us, you're not going to be charged fees. You're not going to be charged $500 or $1,000 to get started, or whatever it may be. Most of the companies charge. It's zero cost to you. So without further ado, I want to introduce you to the person who can connect you to this and get you started, and so that you are starting to build and getting yourself in a better position. So without further ado, I am going to stop screen sharing and I'm going to pass it over to Nano. Nano, it is all yours. Welcome on here.
Thank you very much, Matt. Thank you for the introduction, and welcome everyone here on the call. I would like to piggyback on a few things here that Matt did say. I'll just give like maybe a 10-second background on myself, on how long I've been in this industry. It's coming on, I want to say 6 years now. The first 2 years, I was not very good at it. I kept persisting, and eventually, from that point on, I started being got to the top 1%, just helping lots of people. And the average, day person, right? You don't necessarily have to be wealthy to do this. As Matt did say, this is a life insurance. Utilized correctly, this is a specific type, right? Which is called the infinite banking concept, which is a coin name. The technical term for it is called high early cash value dividend paying whole life insurance policy, right? So to eliminate the terminology, to make it super simple, let's use for an analogy, like a good savings account that pays you the good interest, better than the bank, protects you, it grows tax-free, it is going to be growing, compounding uninterruptedly, and it is also protected from investors. And as a byproduct, you also get a death benefit from it, that you would like to leave it on for your family. One of the things that I do, I am going to be, throughout the call here, I am going to ask for some type of engagement to make sure that, as what I'm saying does make sense to you guys, and then everybody's tracking with it, right? Whenever I present this information to people, and this is what I like to lead this logo, this model, right, in my life is, what is whenever I'm about to do something, what is the purpose for what I'm doing? Like, what am I trying to accomplish? Because by me having that clear for myself, it makes things to be very streamlined, so I don't necessarily waste my time, right? Okay, if I'm doing a strategy, if I'm doing an activity, if I'm doing whatever the case it is, what am I trying to accomplish? I'll give you something fairly simple as an example, right? Okay, I'm going to, let's say, work out or go to the gym. Okay, why am I doing that? Well, because I want to be healthier, have more energy, or whatever the case it is, right? Like, once that is clear for me, I make the decision, then I act upon, I follow through. Now, on finances, this is the same thing, right? And the goal, at least from my viewpoint here, that I'm going to be emanating from you to you guys to help, is to eventually achieve financial freedom. Now, so if I want to be free, right, to get to freedom, let's define the word freedom. The etymology of the word, which I was looking it up earlier, simply means a state of free will, emancipation from slavery, deliverance. Right? I don't have a bondage to something. Now, which that ponders the question: if I'm not free, what am I? Right? So if I'm not free, what's actually happening? Right? To a degree or another, it is going to have some level of bondage, or I'm not free to that degree. The approach that I'm going to be taking it on here today is I'm going to explain a little bit of like the rules of the game from a systematic viewpoint, and then I'm going to explain how that plays out to you, because the better that I understand the rules of a game that is being played, when I say a game, I am simply talking about like like let's say for, again, the example of working out, right? What is the game? Well, the game there, in order for me to be super effective, I had to be consistent. I had to avoid certain types of food, and I had to drink enough water. Those are quote unquote the rules of the game, right? On finances, right? What are the rules of the game? Some of those rules are imposed upon you and I, whether we like it or not, right? We got to pay taxes, right? We have the government printing money nonstop, which is something I'm going to cover here with you for you to understand how this rules of the game impacts me today and you as well, and how you can actually become more cause over it. So let's take a look at a couple of the facts here, right? Things that did occur. I'm going to backtrack and I'm going to bring it to today, and then I'm going to do a little bit of a sketching and show you some things that will be applicable to you, right? So we have in 1913, we have the creation of what? The Federal Reserve Bank. And one of the things that Matt was saying was talking about the generations of savings. I am going to show it to you here, the history of savings per class since that point, right? So here we have, let me know if you can see this. Okay, good, thank you. And I want to, they're able to sketch. Okay, no, I want to see if I could sketch here. No problem. So here we have, right, on this, let me see, sketching. Okay, so on the top 1%, right, we have 1913 right here. They're saving 40% of their money, right? And then we have the top 30%, right? Sorry, the next category of people, number of each group, saving 30%, and the bottom 10%. This is what they're saving. So, and this started happening when? 1913, right? The Federal Reserve Bank comes into play. And now what are they doing? They're printing pieces of paper, right? Pieces of paper called what? The US dollars. Now, by printing more pieces of paper, what happens is we have more pieces of paper in the system, which now we need more pieces of paper to buy the same thing, and our purchasing power goes down. Now, going back to the reason why I'm doing something, right? If I'm trying to become financially free to a degree or another, I am bonded somehow, or I'm not as free, right? That's going to come in layers. So by me, in order to be free, right? Ideally, I have control of my time. I only work if I want to, not because if I have to, right? And in order to attain that, we need to do three major things. Obviously, we got to earn. Then we need to save so that we can invest. And the investment is going to be creating additional income to be part of my earnings. And I do that repeated over and over and over until I have what? Until I have enough income to cover whatever my lifestyle is. At that point, I am free, at least financially from that perspective, right? But it has to be a continuous thing. Why? Because of inflation, right? On this, we have the government is going to continue printing money. This is not even a governmental institution, right? So it is a private institution. For those of you that do not know that, it is going to continue printing money. And another thing is, right, like you also got to take into account for taxes. And I'm going to ask you a question, which might be as obvious as it is, a person might not be thinking with it so much, right? Are taxes going to go up or down, right? Historically speaking, right? If we, at least, I don't know about for you, but in my experience, the taxes seems to be continuing to go up, right? So it's like, okay, is the thing that the quality of life either decreases or I had to learn how to make more money. Why? So I can continue to outpace what inflation is doing. And I do this, right, with what Matt was saying. Ideally, I'm going to be saving 40%. Doesn't mean we're going to start there. Ideal scenario, I'm saving 40% of my income. And we save in three major places, right? We're going to be saving precious metals, life insurance, and then in real estate, which is something like this can be even a subject for an entirely different day, right? So today we're going to be talking about mostly on the life insurance side for a couple of reasons. One, so you are aware, and two, for some of the benefits that I mentioned earlier, such as liquidity, right? So if I'm going to be doing that, I got to be taking that into account. So good. Now that I have mentioned that, okay, good. The purpose is so that I can become free. I earn, I save, and I invest. So I'm going to be doing this, putting this money into a savings, like saving a percentage of my income so that I can be in a position to invest. And that can be utilized in a couple of different things, right? I can be, one, financing my own vehicle. I can be, quote unquote, purchasing my own debt, right? Like when you think of a bank, right? It's almost like you have to detach yourself from you, the individual, and think about, okay, I'm going to be putting this amount of money into this product, into this life insurance where I have access, and I'm going to be purchasing my debt back. And then let me see here what else. Okay, good. So anyway, so that might be a little bit, that number might be different according to each individual. So I got to be thinking with that. Now, back in tracking a little bit back, right? For you up, I'm giving you data on, again, from a systematic viewpoint, so you can actually be aware and know more about the rules of the game, so you can actually learn how to play the game a little bit better. 1913 creation of Federal Reserve Bank. We have in the 20s, we had the market crash, right? The Great Depression, where things tanked. And then after investigations, right, like to see, okay, what happened here, what caused, right? We have the banks at the time and Wall Street, they were deemed responsible for causing that. So what happens in 1933? We have the creation of SEC, Security Exchange Commission. And they come in to do what? Okay, now every type of investment now has to be registered through them, right? Has to be like a registered securities, except the unregistered securities, right? Which are investments. There are only for accredited investors. And this would be investments that are going to be they're going to be paying higher, have lower risk, and etc. I'm explaining to you a couple different things here, right? Obviously, the idea of we got to be earning money to be saving to invest. Why? Because we're actually trying to create financial freedom, right? We got to be thinking with that in mind, because if that is the goal that aligns with what you're trying to do and accomplish, this might be free, right? May not, right? But at least, taking that viewpoint, if what I'm trying to accomplish, I gotta be, going through that circle or that triangle, like as fast as possible, so I can be doing that. So when I take that into account, and again, further information, right? We have the accredited investment type of investments on, like, it's called unregistered securities. They're only open for that. And now they do that, meaning the SEC and the government working hand in hand. Why? Because the reason, right, is like, okay, we're going to have this investment registered here so that a person can be protected. The very individuals, right, that were responsible for having this to occur are put in charge of resolving the issue. And now we have what? Now they control what? The licenses and the type of investments and everything. When it comes to if you're gonna need to have a license in order to invest, right? In order to basically sell those type of investments. And I want to be very clear: the life insurance, this is not an investment, right? It can be, we're using as a savings vehicle so that we can invest. It can work as an investment, but by its own nature, is not an investment, right? We're trying to actually save to be in a position to invest. And I want to make sure that if you have any questions, go ahead and post them. I want to make sure that maybe like you and I, Matt, we can like just want to have a two-way communication here, just to make sure that, for what I'm saying, like if anything's going over anybody's head so far. Is everything making sense so far? You might be muted. Okay, I see you, Wesley. Okay, good. So it's making sense so far. Okay, fantastic.
Yes, it is.
Okay, thank you very much. And I see you, Marisa, here as well, making sense. Good. Now that I have that into account, let me go ahead and explain to you here a couple more things, which I'm going to share. I'm going to do a whiteboard here. Good. So that means my dollar, whenever this is the simplicity of how this life insurance works, right? I put a dollar inside this, and at some point it is gonna grow to $2. Whenever I put money inside the account, I am going to be getting paid 4 to 5% per year. Okay, and this is going to be going compounding. For the simplicity of it, right? So let's say that you pick a number. Let's pick $100. Let's say 30% goes to buy life insurance, meaning buy the death benefit of the policy. And then 70% you have access to immediately, day one. Right? So think about this. This, I can pick a number to be put into this account, right? Whatever the number is for you. And I'm actually going to show it to you a live example of someone who is doing this policy and is saving $800 a month. And then he's putting additional $1,700, which is money that he has to pay towards taxes, right? And I'm going to show it to you here how this is going to play out for him. Okay, good. So far, so good. Let me go ahead and then share with you this illustration. Okay, here's a perfect example, right? So he is contributing on the first year. He's 41 years old. Obviously, I'm not showing the person's information, just obviously protect, his data. 41 years old. He's putting 31,000 for the year, right? That percentage that is called the base premium is what he's required to do. The additional amount is what is optional, right? That he can put it there up to that amount, right? He doesn't have to, but in this scenario here, it is being designed for that reason. So we have 800. Let me do some calculations here. 800 a month times 12 equals 9,600. And then you have the remaining amount, which is 1,783 and some change times 12, right? It would be equal to the 31,000. Now, if you see this here, he's only doing that for the initial 5 years, right? And after that, he's only contributing 875 a month, or 10,500 for the year. After 10 years, he stops contributing. He has accumulated $207,000. And this is where it gets really interesting because of the compounding effect, right? He doesn't have to, right, stop contributing, but this is designed just for the next 10 years. You don't have to, right? You and I would be having a meeting, or the Matt, or Mike, one of the individuals that also works with us, the case designer as well. Let's take a look to see how you're doing with you on your policy. And it is something that you, after you actually fulfill the minimum amount of years on your policy, which is going to depend on each case. But for simplicity of the conversation here, you're going to be contributing for a minimum of 5 to 7 years, just for sake of example. And after that point, you're like, okay, it's your option whether you want to continue contributing or not. Right here we have showing 10 years. So for the next 10 years, you're going to be doing this, and he has 207,000, and he has 29,000 in annual dividend. He stops contributing into the account, right? Let's assume that person stops contributing. After an additional 10 years, he's going to have a total of, here we have the death benefit, right? He's going to make an additional 107,000. So think about this, right? A savings account that basically is giving you what? Like 10,000? What is that? No, close to 10,000. Yeah, close to an additional 10,000 because he's a 234. Yeah, be over 10,000 that you would be getting per month or per year, I should say. I'm sorry, in dividends, right? And you keep contributing that. And this can be what? Guess what? This can be used for paying your taxes, financing your own car. Let's say that after a certain point that you had this amount. Okay, I want to use this as a retirement option. Let me, I want to take it out 48,000 a year, whatever the amount is, right? That you think with that. So this can be utilized for a couple different ways. Again, I'm going to do a little recap here of a couple of things of what this does, right? 4 to 5% interest annually, and has been doing this for the past 150 plus years. That means that despite of what's going on in the world or in the economy, the life insurance has paid out a dividend without skipping a beat. A guarantee, it is only good as a guarantor. So if you have something that's been paying you for the past 150 plus years, Great Depression, Civil War, you name it, COVID, right, has continued to pay, right? And guess what? Probably won't stop, right? Like you have different things that's just the nature of being alive, right? That we're going to be dealing with. But it has shown, point being is that has shown its sound financial stability to be able to do that. And so I want to go ahead and open up some additional questions here. I'm keeping it very general to a degree. One of the things here that I do want to mention it, right, that Matt mentioned to begin with, this concept has been around. You might even ask yourself this question, right? You may or may not have heard of this. But if you ask yourself, how come I have never heard of this, right? Well, that's a great question. How come? Well, for one, an agent gets paid way less when the policy is designed this way. I'm going to go back to sharing the whiteboard here. So we have a question here from Eric. So how is this whole life insurance policy different from a whole life insurance policy offered by local insurance agents? That's a very good question. Eric, so there's basically two types of insurance, or at least we have permanent and we have term, right, or temporary one. And on a temporary one, which would be for a period of time, term, right, for term period, like can be 10 years, 20 or 30 years. So that means I'm going to be paying the lowest amount of dollars for the highest amount of coverage possible. So that can be applied. It is fitting, right? It's not, you can't really compare it, but it can be fitting for different scenarios. Let's say an individual, he's married, he's the only breadwinner of the house, right? But he doesn't have a lot of disposable income to work with. Then maybe, okay, good. I'm going to set up a $50 a month term insurance. God forbid something were to happen to me and then my wife, and then I die, and then on this example, right? And then I have a wife and kids and a mortgage, et cetera. Now she's left with this financial burden. So that would be fitting for that example as one example, right? But then like, let's say the guy's 30. By the time he's 60, he's only like, okay, the coverage ended. Okay, so he'll be covered for that period of time. On the permanent life, you're covered for life, basically until you die. Whether you start at 20, 25, 30, 45, whatever the age that you start, that means you're going to be contributing for a period of time, 10, 20, 30 years. And once you stop contributing, this particular one will continue to grow, or just permanent in general, like you will pay out a death benefit. when you do die, right? When they're eventually going to have to die, which is unfortunate, but that that's the simplicity between those two. Now, to further answer your question on this type of whole life insurance, a couple of things. It does require some level of knowledge and expertise to design the policy to be done this way. That's one thing, right? As Matt was saying here earlier, right? It's finding a company that does this type of stuff exactly like this. Like it's not, you don't necessarily found in every single corner, which is part of the reason that some of them actually do charge for the education part, right? Because once like, okay, a person might not have heard of this, and to a degree, a person has to also to be removed some false data they might have about it. It will require more time, right? May or may not require, but at the end of the day, those individuals writing a policy, the way that it's been described here as an infinite banking concept, they're getting paid less. And I want to go ahead and show it to you how that's so. Let me just find the whiteboard. Okay, good. So the example that I gave it to you earlier, right? So if I do $100 a month, this $100 here on the regular type of permanent insurance, this full amount, it is going to be buying death benefit. And this is what the agent will get paid on. By designing as an IBC concept, infinite banking concept, that means, as this example, 30% goes to death benefit, and 70% it is cash, liquid to the customer, which means that the agent, it is getting paid on this amount, not on the 400. Okay, and we have here, where and who is investing my money to yield the kind of return? It is guaranteed with no risk of loss. So a very good question, Linda. So the insurance company, right? They are required to have reserves. They do have other types of investments they're putting the money in, which it varies from company to company. This is something that perhaps if you would like to provide your email, this is something that I can or phone number, we can have a conversation. I can give you data depending what it is. But in the general sense, they're investing in businesses, they're acquiring, investing in real estate, and that's what kind of comes down to, right? Like investing in business, acquiring real estate, and putting that money to work in different areas. And they have been doing this for the past 180 years. Now, this is also called a unilateral contract, which means the insurance company, they are obligated to pay the death benefit to you, which means that by the end, when a person, they passed away, they're going to be paying the death benefit, right? 500,000 or whatever the it is, the death benefit. And let me see here. Okay, good. I see your email. Thank you very much. Wesley says very conservative investments. Yes, Wesley. This is more like you are becoming what is called a mutual shareholder in the company, where you become what's called like a part ownership, which is why you also receive a dividend, back on your policy. And the company, meaning the life insurance company, is putting that money to work, right? It's not me, it's not the agency that I work with. It is this massive giant of a company that's putting the money to work. And it cannot be called per regulations, right, as an investment for the reasons that I mentioned to you earlier, but that from the SEC, that every type of investment has to be registered through the SEC. So this is technically not considered an investment. It's a savings vehicle so that you can invest. Can be used for as an investment tool, Most definitely, it can be used as an investment tool, but on its own base, it is not an investment per definition. I'm also going to clarify that word for you so we can also be on the same page here. When we're talking about investing, right, that means I'm going to be clothing my capital, right? That's also what the etymology of the word investment means, which means, right, furthering, like expanding like the rules of the game here. So if I'm talking about investment, right, I can either invest something for appreciation, meaning I buy something and I hope that this thing goes up in price. When and if it does go up, I am going to sell it, right, for profit. The problem is, right, one, I'm relying on appreciation and hope to a degree, right? But whenever I do sell it, I no longer have the investment. The second option, which can be done, right, it would be for income investing uh, investments or income investment investment. That's basically what it comes down to. That means I put money in this thing, I own it, and now this is going to be paying me additional income monthly. So I still have ownership of the investment, and it is paying me additional, which is increasing my top line as far as what I earn, which is part of the reason why if you utilize this as a bank, or think about this, I'm going to be buying a car. Instead of going to Bank of America, name whatever bank is, I put the money there, let's say $30,000. I buy the car. Boom. I quote unquote finance the car. Now I make myself a payment plan to pay myself back. Let's say 400 a month or whatever the amount is, right? That means this 30,000, I'm going to be contributing into it, right? The $400 a month, I'm repaying myself back, and this is still growing at the full amount, right? So it can be utilized as this way. So let me see here some additional
So to
questions.
clarify what you were just saying, what Anna was just saying, this is the part that really caught me the most, and it's basically like arbitrage, right? Because you're taking the money out, you're buying what you need to buy, you're paying yourself back at whatever monthly payment that you feel like is the correct amount because it's your money, you're the banker, you pay yourself, I want to pay 200 a month or 400, whatever it is. But the cool thing is that you took $30,000 out, you're still earning interest on the 30,000, even though you're driving the new vehicle that took the money away from the insurance company. They're still paying you your interest rates on the $30,000. So your car is actually earning you 4 to 5%. So it just blows my mind because if you go to borrow from, like he said, any of the banks, and then not only are you paying them interest, they're surely not paying you interest. But if you're putting away the savings account and you borrow it to get what you need to get, because we all have to live, we have to have a vehicle, we have to have, housing of some sort. We have to have something, right? There's certain things we have to have, and it's just life. And so when we do that, we're still earning interest on it, even though the money's not there anymore. And that to me is like, where else does this happen? Why were we not taught this in school when we were in high school? Why didn't they teach us that you can put a savings away and you can use your savings to buy things and the bank will still pay you interest on it because this is something we're not taught. So I just think that's one of the pinnacle points of this understanding this that made so much sense to me.
Absolutely, right? And good point on that because I want to piggyback on what he was saying here additionally. So Wesley says where the insurance companies grows the fund. So from a legal perspective, right, Wesley, we're going to compare banks to life insurance. When, again, going back to 1913, right? At that point, we have something that's called a fractional reserve banking, which means you and I deposit our money, right, our cash dollars into the bank, a regular bank. Now, the bank is able to create money, literally able to create money, currency out of thin air, which means they're going to loan this money out 9 different times. Up to the point so most of them nowadays have a requirement to have $0 backed up, which means that if every single person decides to take their money out of the bank could go broke, which is why, like, if you're trying to take out a decent amount of money out of a bank, like 10,000 or more, sometimes they don't have that. Like they're like you're gonna give me 2 to 3 days, right? Again, like just I'm going to invite you to look at this kind of stuff. Now, the insurance company, they actually are required to have the money there before they put it to work, right? So, which means if I have no financial responsibility on the money, right? Okay, if I lose it, FDIC insured, right? Well, let me ask you this. So the government is going to pay for that being FDIC insured. Now, let me ask you this question. How does the government make money? Who pays every single year, right? Again, starting uh, in, like, I think it goes from 1861 when we have taxes, right, being implemented, right? So we pay taxes for the government. So the government guarantees the FDIC insurance, right? It is FDIC backed up. Okay, cool. If I lose my money, I'm gonna get it back. But who is paying for that? You and I. Which is a little like when you think about it, like when I came across all this information many years ago, I went through all kinds of emotion. I went into apathy, then I was angry, and like, oh my God, how is this possible? No, everything that I learned in school, that's not possible, right? And we can go for more into this, like talking about precious metals, how there's like an entire cycle. Like at one point we had the dollar being backed up by gold. That's no longer the the case anymore, and we have this cycle of transfer of wealth. That would be like a different conversation for a different day. But again, if you just look and observe, if that's the case, I'm sure you're going to be able to see it for yourself that that is being the case. So let me see here. How
Yeah.
do older individuals qualify? Sorry, go ahead, Matt.
Yeah, I was going to say that question that Thomas asked, that was something we just researched into a little bit ourselves too, because that's a really good question to have. And he's saying how do older individuals who are 65 and older, because you can't qualify for certain types of insurance, or if you do, it's super expensive. And with this policy, what we learned is that you can insure somebody else. You have loved ones, you have children, you have grandchildren, you have a spouse, you can insure if you own a business, you can insure key employees. There's so many people you can insure, and the wealthy take advantage of this all the time. President Joe Biden, I think, has three, if I'm correct, of these policies. He's only one person. How's he got three? Because he's insured key people in his life. So you don't have to insure yourself. You can insure others, and it makes it so you can have this kind of a policy. Is that right? Is that
Yeah, yeah, that's very correct. And Thomas, just as an FYI, I also have three policies, right? I have one on myself, I have one on my mom, and one on my dad. Now, the amount of coverage that it is basically that is going to be getting from them is obviously a little lower because obviously they're older than me, right? But nevertheless, you're able to do that where I am the owner and they are the insured. So if you want to insure on someone else, we can. It can be done, right? Where you're the owner, meaning you control the money, you control the policy, and this it can be insured on another person. It could be your son, or or a wife, or a person related to you, but where you have full autonomy of what goes and says into the account. And obviously, you can pick who the beneficiary is going to be, right? Could even be the person who the insurance is on, right? That'll be up to you. Okay, very good. So uh, it's about time the working guy gets to take advantage of loopholes. Okay, that's a good point. And that's just, you know, I'm not sure if I would call it a loophole. It's just accessible, just not very known out there, right? So it's an option for individuals to have this done. And then so most definitely. Another thing that I want to mention it to you here, right? It's okay, good. It's Tuesday night, I'm sure everybody has let that be with information. Well, I'm sure we have people going, in different stages of their life, different situations. I just want to take the time to acknowledge you for being here, because it shows the commitment that you have to bettering your life. And then what Matt and I is actually making available here for you is that anyone who is actually an active mint builder, we are going to be, if you so choose, if this is something that does make enough sense for you and you like to get more information, I'm making myself available here to get on a call with you, answer any kind of questions, see like, okay, let's take a look at your specific scenario. Let's see. Okay, good. Let's say you're like, okay, I like what I see. I'd like to learn more. And then you can, put your information here and we can definitely set up a time to speak to see how further can this be applied to you in your life and if it's a fit. We have an additional question here. Can I put my IBC into a trust? I believe you can. You have to have an individual be insured, right? But then you can make I want to see, like, you want to see if the trust would be owning the policy, or you okay, Eric, I see you. Thank you. You'd like to learn more. If you want to go ahead and just message, I want to say myself or Allison here, with your information, we can definitely reach out to you. And then we can drop your email here on the chat as well. Phone number would definitely be helpful, so I can set up a time to speak. And then Eugene, so the short answer, it is yes. And that you can put in a trust, and maybe if you can maybe a little bit more data as far as how, like, if you want to have the trust have the benefits of it, or if you want the trust to own it.
If it's done right, it can be really secure that way. Kind of like Rockefeller, I believe his family still has a family bank, and it's all their trust is their bank basically, right? I think it utilizes this kind of a system, and it's like rock solid after like what is it, almost 100 years, and still family can borrow money from it for going to certain things, for like going to college or whatever, and things like that. So it definitely is possible. That's for sure. I think we had
Okay.
another question too in here. What's the minimum deposit? Well, there isn't really technically a minimum deposit, but to make it worthwhile, that's something definitely you want to get on a call and we can work through like what makes sense for you. I don't know, you probably know a better answer for that.
Yeah, for sure. And this is something that which is, again, depends on the situation, right? Ideally, a few $100s, right? Like 200, 300 or more, because you want to be able to utilize this for your benefit. Something else that I want to mention to you, that we're actually able to find additional money that you have within your scenario, because maybe this is something that we can be, even do a webinar for next week, is how this can be used to pay off your debt, right? So let's say that you have a $5,000 credit card, right? And then your minimum payment is $100 a month, right? But then you're paying 500 towards the credit card. Maybe, right, you can lower the minimum payment, right, to only 100. Now you just freed up $400. And you're saving that into the account. Whenever you have enough money inside your policy, you take that out, you pay the full amount, and use the $100 that you're paying towards the debt to repay yourself. Now you're saving 500 a month. So there are different ways that can be done, right? So we can find additional money within a person's. It's like we're just going to be refunneling the money that you're already making to your benefit on this. The general answer, right, would be like a few $100s just to be beneficial for the person. So you can actually utilize it for your benefit, but around 200, 300 a month. If you have any more questions, I'd love to jump on a call and just go a little bit further to you. Let me see here. We have Eric.
While
In
he's
a
reading
hypothetical.
that, sorry, while you're reading that, Nano, I was just going to say too, if you guys are interested in it doesn't have to be just monthly. You can contribute just once a year if you want to. Maybe you get a lump sum every year from something and you can just put it in like that. Or if you're more comfortable doing monthly payments, that's another way of saving as well. So
That's right. A hypothetical question to check my understanding. I invest 2,000 over a 2-year period. in your life insurance policy. Then 15 years from now, with the interest earned, I can use the money, but I always have to pay it back, correct? Uh, so Eric, you don't have to pay it back if you don't want to, right? So you're going to be putting the money inside your policy for a period of time, right? It's ideally we're going to be looking at a like 10-year plan, right? You can continue after that point or not. When you take the money out, you don't have to pay it back because it's your money. And the reason why that can occur is because let's say you contributed, let's use this year example, 20,000, right? And then it's a 10-year span. But then you are insured, let's say 500,000, right? Your death benefit. What is going to occur, the insurance company is going to take that as an advance of the death benefit. So instead of whenever uh, the individual do pass away, instead of paying 500,000, they're going to deduct whatever amount they've already taken out. In your scenario, 20,000. So instead of the person receiving 500,000, they're going to receive 480,000. So to answer your question, you do not have to pay it back. Now, you'd be smart for you to do so, especially because, again, if you think about this, right? Again, however old you are, how long do you plan to be using a bank? I'm like, well, it's for myself, right? Like, well, probably until I die, right? Like, I'm gonna be utilizing the bank. So, again, this is like a little bit of a shift of a thinking, right? Or okay, good. Why I could use the same thing? Because think about this: my money, really, when the general person when think about money, think about dollars, right? My money will always go into somewhere or into something. I'll say that again. My money will always going to go into somewhere or into something, meaning it's going to go in, let's say if I have it in cash, right? It's going to go into the bank or a clothes or a cell phone or whatever, right? And once I spend that dollar, guess what? I never see that money again. And if I have the dollar, right, being devalued because of what the Federal Reserve Bank is doing, since 1913. I don't think they're going to stop anytime soon. Right? So it is to my benefit or to never lose the compounding growth of the dollar ever again. So by me putting this money inside my accounts, that will continue to grow. So it is to my benefit to repay it back so I can continue using it, but I don't have to, which is also a plus side.
And it's also, and you don't, I know you said hypothetically 15 years, but technically the moment you start putting money into your own bank, your IBC, you can start using that money. It's available
Day
to
one.
you. At day one, it's available to you. So you can use it whenever you want to use it, and you're still going to keep earning interest on the money, even though it's taken out and utilized. So.
Okay, very good. I see you. Okay, good. Definitely want to learn more. Fantastic. Just feel free to send your information. Definitely can set up a time to speak. I want to see if there's any additional questions here. I'd love to, see if I can help answer any additional questions. And I
You guys can
see,
email. You can drop if you feel better. You can go on the chat and where it says everyone in blue. You can drop on the arrow and you can select. You can select Mint Builder. Allison and Nano are both licensed, so you can also select them, and you can just put in your phone number and email it there, and it'll go. And nobody else will see it. It'll just go to them, and then they can follow up with you, making sure to answer any questions you have, so you fully understand the benefits of this huge deal.
uh, and
You're welcome, man. I totally get it, man. It's everything is new until it's not. So I mean, that's just how it is. So.
and well done, Eric, on continue to learn because that's a trait of a person who is uh have a higher chance of succeeding, right? They're constantly like, taking the time to learn and improve.
So Eugene, that is a question I was expecting to come up because it's a great question. I love it. You're awesome. You and your team are awesome. So technically and legally, you can't earn commissions on on any insurance sales unless you're licensed. And if anyone is ever interested in getting licensed, once you understand how all this works, then that would be definitely something that we will work independently with you on. So definitely reach out to us. You can give us a phone call and talk to us on it. Again, we don't charge any fees for this, but then so people are like, well, how is there even commissions? How does that even work? Well, um, the insurance company, is the one that is the only one receiving any money, and they're the ones paying you interest. They're the ones that are paying your death benefits. They're the ones doing all of it, and they're probably mathematically the smartest numbers people on the planet. I'm sure they spend billions of dollars a year trying to make sure that they're mathematically the smartest people on the planet, and so they know the numbers, and so they're the ones that say, hey, on certain policies, we're able to, be able to swing some kind of a compensation. So I'm sure we could work with them on that, but you'd have to be licensed before we can do that. So
Eric, most definitely. I see your message here, and we can definitely do that. Okay, good. Any additional questions here? I see you, Samuel, Nicole. Yes, thank you. Marissa, thank you. Okay, good. So let me see here. Linda, okay, where and who? Okay, good. Well, I think we answered that. I don't see any additional questions. Okay, perfect. I guess there's one more. Eric. Okay. Well, fantastic. So over to you, Matt.
yeah, good stuff, guys. As Nana was talking about earlier, basically you can't ever just stop spending your money. And maybe some of you have gotten the book that we wrote here for Mint Builder, and it really is talking about that our money is like it's a current. You can think of electrical current, you can think of a river flowing current. Yeah, both of them have to keep flowing. If your electrical current stops flowing, we're not on this conversation right now because the computer wouldn't work, right? It needs to have a flow. Our money has to be the same way. Our money has to constantly flow. The rich people, when I say rich, I'm talking about better than the top 1%. They understand. It's like something that was just, they were taught maybe when they were kids or something. It's, again, not something we're taught in school. Not even if you're MIT or what, I mean, it doesn't, it's just something that we have to know from somewhere until and otherwise you just don't know. And if you are trying to hold on to your money, you're losing your money. If you're stuffing it under your mattress, like again, my grandparents back in the day, they would save their money, and it was fine way back then because inflation wasn't as bad, savings was really good, but it's not in the world we live in anymore. Currently, right now, if we don't save or if we don't use the money that we're saving for something to better ourselves or put it somewhere where we're beating inflation, then it's a dead current. And the dead current means that our money is being stole from us, and it's nothing we can do about it. It's just a silent robber, a thief that just comes in and is constantly taking it. You might have $100,000 in the bank, and you go back there 5 years later, you still have 100,000. Go back another 5 years, still 100,000. Maybe even went up a couple hundred or $1,000, but that money is no longer able to buy $100,000 worth of stuff compared to what it would have 10 years ago. We know that we see it around us. Like here in Florida, housing has went up doubled in the last 5 years. So if you would have just sat on the money instead of buying a house, for example, I'm not advocating real estate necessarily in that aspect, but I'm just saying that's what we have to do. We have to flow our money. And so putting it into something like this, now you're getting an interest, guaranteed interest, something that's never failed paying interest for over 100 years. What else can say that? There is nothing else. Wall Street can't even say that. It's always paid interest. 4 or 5% is what they're telling us that we can tell people to guarantee it. And it's a savings. It's not an investment. You're putting your money in there. It's guaranteed. Then you take your money out and then you invest it where you feel like that's the best place to invest it. I know someone mentioned in the comments, maybe that means you're using it for negative debt, paying off negative debt. So if you have high credit cards, putting it in the savings first before you pay your credit cards is a better deal because you're going to make 4 or 5% interest in savings on your money, and then you can immediately pull the money back out. You can pay off your credit card debt and save 20, 30% interest on your credit card debt. So negative debt repayment is also an investment in yourself. You're saving yourself future pains, or put it into something positive. Maybe it's real estate investment or whatever other investment, crypto. Someone mentioned crypto, whatever it may be. Silver and gold savings. You can take your savings from your infinite banking and convert it into silver and gold savings. Now you're double dipping. That should be illegal, but it's not. It's not illegal. So this is what we're talking about. This is a no-brainer. This is an absolute no-brainer. It's just kind of a matter of thinking how much savings can I afford to do, and most people are like, well, I can't. When I start making more money, I'll start saving. But you make a little bit more money, and then inflation and this and that, and we spend it. There just has to be a place where we can say, what can I cut into to prepare my future to make myself better, my family, me, and my loved ones. How can I make it better? How do I start that? How do I dig into there and get this started? What would that equate? Nana was talking about maybe a few hundred a month. A lot of the insurance places look for like at least 800 a month, but it doesn't have to be. Whatever it may be. Some people we know we've talked. There's people like Mike, the guy that owns the company, is like, we have people that drop 25, 50, 100,000 in there. It's just whatever works for you.
Yeah, and if you have a level of interest, right, and you like some help to to figure it out, to see if like, hey, I'm really interested, but I'm not sure if I can do this or whatever the case is, right? Let's jump on a call. You don't need to figure it out by yourself. Again, making myself available here to you, and then we'll take a look at your scenario. You may not qualify, right? Like, may not be in a position, but it doesn't mean you'll always be there, right? So at least we can put a plan in place to see what can be done. So good. Maybe you're ready to go. Fantastic. And here's another quote unquote thing that you got taken into account is this is life insurance, right? That a person has to go through an underwriting process. It's not something that's like, okay, I decide I want to start this, like, good. Like, it's going to take a couple of weeks because you still have to go through an underwriting process. A policy has to be put in place. We had to meet up with a case designer that's presented to you. You look at it, you approve it, then you start putting the money into the account. It's not something like, okay, good, we'll jump on a call tomorrow and start putting money on Friday. No, it doesn't work like that, right? So just keep that in mind. But and you don't have to do the thinking all yourself. You're welcome to, but I'm also here. We are also here to help you in case you would like to help.
Absolutely. Again, anyone, if you want more information or you want us to, Nano can reach out to you and he can answer directly one-on-one with you to go through it. Just privately message him or support on here or Allison, and just let him know your availability or your phone number, and we can definitely get that done. And if we're going to be ending this here in a minute, you can always just email support at MintBuilder, as Allison wrote, support at mintbuilder.com, and we'll get you connected and get this rolling for you. Let's get you guys on the awesome track. Okay, Samuel, I got that. Thanks. All right. So if there's no further questions, and you can get deep in this too for sure. I do want to actually, you know what, guys? Let me drop this. Let me drop this to everyone. I'll change my thing here. Um, I have a link for you all on here. 1 second. You
I
guys,
have a question.
yeah, let's go ahead.
Um, can you deposit precious metals to start the account?
So you would have to utilize like currency or dollars in order to fund the account because this money is going to be going to life insurance to the company. So it has to be done like usually via check or a bank account.
Mhm. So if I wanted to convert precious metals, I'd have to do it on my own. I couldn't do it through Mint Builder.
I believe.
Miller does sell rather purchase some precious metals. Um, so it is potentially it's plausible to do so. But yeah, I mean, you could definitely reach out to us and let us know what you're interested in to selling and utilize that. And then, but we would probably send the funds to you so you can deal directly because Mint Builder in itself is a precious metals company, and so we don't do the insurance. We have employees that are insured, a lot. So that works in that direction. So we would build a fund insurance for you, but we could easily get you the funds to do that. So if that helps.
Okay. Answers my question.
Very good.
And I did drop a link there for you guys. Mike, the owner of the company we partnered with, one of the best we could find anywhere. Super, super nice guy. And Nano is your direct connection will be your direct connection basically with him. We did a webinar like this a while back, and this is a 52-minute video, and he goes through some details as well. There might be a few more things. I don't know. There's some things we probably covered that weren't covered on there, and then vice versa. So it'd be good information. But definitely the best thing to do would be get in touch so Nano can answer your questions one-on-one.
Yeah, most definitely, and then I'll probably be reaching out to, to a lot of you just to introduce myself, so establish a communication line, and then might not be the right timing for you. It's not a problem, but at least we can have the information there to be again servicing you whenever you are ready for it.
Yeah. Okay, so appreciate you, man. So yeah,
So,
go ahead.
I'm sorry.
Yeah.
When can I get your number? Not the other guy.
Yeah.
Mine?
Yes.
Well, do you want to drop your information here on the chat, and then I can give you a call. But my
If you
number,
do.
yeah, if you want to do that, my number is 469-360-1732.
You would say all of that when I don't have a piece of paper handy, wouldn't you?
Yeah. So if you want to message me, I'll go ahead and I can send you give you a call to shoot you a text so you can have my number.
All right, let me put my number in the chat and then you can
Absolutely.
hit me up, okay?
Thank you, sir.
And put my name too.
Sure.
That's Jerry White.
Very good.
So when you see it, you can say, oh, that's that guy right there.
Well, fantastic. Let's see if
Yeah, Eugene, that's a good idea too. Eugene has a good point. Your Mint wallet is a way to like quickly liquidate precious metals that you have, and then you can receive funds like that next Monday. They'll be received right into your bank account. So that is a good tool there.
But I would have to ship them.
Those are digitally bought and physically stored, so you don't have to worry about the shipping and all that kind of stuff. But if you're talking about selling what you currently have physically, yeah, you'd have to ship them. And I appreciate all you guys' patience with us as we go through getting the new website completed because it's been literally one of the pinnacles of frustration in my lifetime is getting this completed because we were hoping to have it done at the beginning of the year, and now here we are next year, and it's still there. But everything is good and great where we're at currently, but we just want it to be even better. And so it's we don't have as much patience as everybody does because we want it to be better for everybody now, not later. So, but I think we're weeks away. We're just a few weeks away from having it launched, and we'll definitely do another Zoom to launch that out and let everybody know the good news. And we got a great promotion to run with it, and it's gonna be a lot of fun. It's gonna be something that's gonna help people save more and be more affordable as well. So, all right.
Very good.
I guess we can end it with that. It's been a good hour. Nano, unless you got anything else.
I think that was a good productive call, and then we might be doing this as a weekly thing just to give you guys more information from different viewpoints of what can be done, and just providing you with content and education, just an overall understanding of how this can be utilized.
Absolutely. Yeah, exactly. There's always more information to learn about it and understand. But definitely, if you guys please email us at support@MintBuilder if you want to learn more information. We'll be very happy to get you going on the right path with that. Okay. All right, everybody. Thank you so much for being on, taking the time out tonight. Really do appreciate y'all, and we'll catch up to you again here real soon. Okay. Talk to you soon.